Bucksbaum. How are you doing today?
Fantastic, JT. How are you today?
I'm doing great. I can't lie.
Cool. It's a good day. I actually asked if we could kind of do something today because I saw a very interesting article I think I shared with you.
Definitely.
It was, I think Redfin, I think that's the name of the place, did a poll. And as interest rates were rising, the poll stated that, what would 5% mortgage rate do? It would roil, that was the term they used, roil the real estate market. And so when I read the article, I thought it was rather interesting. They stated that 25% of the population that they polled would slow down their process. 6% would stop looking to buy a house. And one of the other things they found in the survey was people were concerned that they could only deduct up to $10,000 of taxes, real estate taxes, within the new tax law. That make any sense to you?
So I've been thinking about this a lot. So when I first entered into the mortgage industry, the rates were at 3.5%. And I knew better than anyone else, if you're going to buy a home, now's the time. But I personally wasn't ready to buy a home, of course. I'm coming out of school. I don't have the proper finances, but in my head, I know that's the best decision to make. And now we start to see interest rates that are creeping, and I find it hard that a lot of people think that that's going to deter millennials from buying homes, and I really don't think it is. I think people are going to buy homes when they want to buy homes. And so I know I was talking with you, and you kind of discussed how much of a difference a half of a point in interest would do to your payment, like what that would look like in a monthly payment, and how it's really not as big a deal as people make it out to be.
Right. I always find it interesting. So if you take your typical $250,000 loan, which is pretty typical in our marketplace, I know marketplaces are different, but in our marketplace, $250,000 is pretty average. So a half a point rise in the interest rate would cause your payment to go up roughly $70 a month. And while $70 a month, no, I don't want to pay an extra $70 a month either. But when I think about it, that typical buyer's making $7,500 a month. That $70 is less than 1% of his gross income.
Yeah, I mean, I can safely say, the $70 sucks, and I would rather save that $70 every single month. But when it comes time that I'm ready to make the move to buy a home,
$70 shouldn't stop you from buying a house.
$70 is not going to stop me, because I'm going to cringe every single time I'm handing in a check to my landlord and I know I'm paying his mortgage and I'm not going to see that money back. So I think it's more important to know that you're making a smart financial investment for the future than trying to save the extra $70 and wait till rates come down, which you never know if they will come down.
And since our shows generally are kind of tailored toward the first-time home buyer, I thought that the article was interesting as well, talking about you can't write off taxes, real estate taxes over $10,000 a year. In that first-time home buyer marketplace, at least in the Philadelphia metropolitan area, I don't think you're finding a whole lot of stuff that's got taxes over $10,000 a year.
Yeah, unless you're buying on the main line or in Swarthmore, I don't really think you're going to be looking at taxes that high.
So yeah, again, and I've always said, and you and I have had the conversation, I wouldn't buy a house or not buy a house based on what my deduction is. Is the deduction great? Sure, Uncle Sam's helping me make my payment at the end of the day. But is that the reason I buy? So as a guy who's helping people make financial decisions, I'd like to think that's what we're doing. I never use the tax advantage. I just think the tax advantage is cool to have, but I don't use it as a ploy to buy a house.
Yeah, you're not going to justify buying a house based off of the tax advantage.
It doesn't make a lot of sense to me. So I thought the article was interesting. I thought that the article, we are finding as the rates are rising, as they have been doing over the last week or 10 days, that a lot of people are a little slower to make a decision. I think people are a little weirded out by the fact that the rate went up. And I guess I just don't necessarily understand it. So I wanted to talk to you about it.
I understand the concern from the consumer's point of view where the interest rate rise is concerning, but I don't think it's so concerning where your monthly payment's going to change that drastically. And I don't think it's really going to change when a first-time home buyer is ready to buy or not. I think that's a life decision, and I think you kind of roll with the punches with where the market's at.
Cool. I always feel compelled to tell people that ask me about the interest rate that my first house had a mortgage rate of 14.25%, and I was ecstatic because I locked it in right before it went to 15.
That's absolutely nuts.
So I guess as we wrap this up, because we try to keep these as short as we can, it should be less about interest rate, more about is it the right time, more about how do I do my loan, and maybe I can save a portion of that $70 by doing no PMI.
Definitely. I think the thing to look more into rather than the interest rate is your debt-to-income ratio to make sure that you're in a comfortable spot personally and that housing payment isn't too high. So that's just what I think people should be looking out for.
I always appreciate the time to sit and talk to you about something I read in the paper, because most people don't read the papers, but
not anymore. We find it all on Twitter, but not that article. All right, this is JT Kritz,
Peter Bucksbaum,
and we are signing off. Thank you.
Thank you. Have a great day.